Welcome back. Here with us on Urban Debate on Mirror Now, and joining us on the broadcast today is Montek Singh Ahluwalia, former Deputy Chairman, Planning Commission. Mr. Ahluwalia, thank you very much for joining us here on Urban Debate on Mirror Now. If I ask you to describe the state of the economy in India today in one word, what will you say? How will you describe it?
Well, I think it's bounced back from the big downside which it experienced during the pandemic. But the bounce back is not even. I mean, some sectors have done actually quite well, and some remain badly hurt. So there's that aspect. The other thing is that one can assume that beginning next year, we'll be starting with GDP roughly where it was in 2019-20, maybe a little above or something like the same amount. So the question really is that what's going to be the growth rate going forward? I don't think the growth rate in the current year is any indication of what the growth rate will be going forward, because before the pandemic, we had slowed down. And let's say the normal assumption would be that when the economy gets back to growth, it'll go back to the same level of growth that it had before the pandemic. Now, if that happens, then growth won't be much more than 5%, which is not going to be good enough. Now, the good news is that, the finance minister set a much better target, somewhere close to 8%, 7.5 to 8, she says. And I mean, I think if she achieves that, that would be very, very commendable. So it's a good target to set, and it's a good target for her to measure her performance against. But it's tough.
So you're saying that next year the GDP growth rate can't be more than 5%?
No, I'm not saying that. I'm saying if we view what has happened in the last 12 months as kind of getting back to the GDP we had in 2019-20, then when you look forward, the question to ask is, are we going to resume the growth rate that we had before the pandemic, 2 years before the pandemic, in which case it will be only 5%, or can we do better? Now, I think the potential for doing better is there, but then one must attribute that to certain things that you're going to do now, which weren't happening before the pandemic. And because of that, things are going to be a lot better. The difference really is that I don't think we can say that the world economy is going to be a lot better than it was before the pandemic. There's big question marks and lots of uncertainties. So it's not as if we are going to get what they call a tailwind from global growth. So it has to be something we do ourselves to expand our growth potential. And that's really the whole agenda of policy.
But Mr. Ahluwalia, the government is of the view that over 9% growth looks possible this year as the economy remained resilient, especially during the third wave of COVID. In fact, Finance Ministry has also come out with a report in which it mentions that the current year may end with an economic reset manifest of a post-pandemic world. Do you see that happening?
Oh, I think if there is a manifest, I mean, if they put forward some kind of operationalized policy statement saying this is what we're going to do in the course of the current year, which wasn't there before the pandemic, and that's why we think we're going to do better than 5%, I think that deserves very serious consideration. Because, I do think the potential for doing better than 5% next year is there, for the simple reason that we are only going to be at the 2019-20 level. I don't know where the 9% prediction comes from, because the latest data that we have doesn't actually suggest stronger growth than when the GDP projection was reduced to 8.8. So I don't know what the basis for that is. But, these are small differences, whether it's 8.8 or 9. The key question is that for 2 years, we will have got back just a little bit above where we were in 2019-20. That's 2 years ago. Now, under normal circumstances, during this period, even at the pre-pandemic growth rate, the economy would have grown by 5% a year, let's say. So you could argue that in the coming year, we're actually maybe 10% below the potential if we had not had a pandemic. So the question is, how much, and in addition to that, you have to factor in the growth for the current year. So, even if the longer term growth possibilities are uncertain, there is scope. But then you need to know it's not going to happen automatically. You need to know what is it that the government intends to do to realize that possibility. And I mean that if she's coming out with some kind of a clear statement, that would be very good.
So you believe potential is there? Are right steps being taken? Do you think budget had all the ingredients that the economy requires right now?
Look, the budget is a one-year statement, and I think there are some things about the budget that can be said to be good, and I've written about this. I mean, for example, I agree with the thrust towards getting the public sector to do a lot of infrastructure investment. That's a good thing. The problem really is that most of this thrust comes in the form of giving additional long-term loans to the states in order to help them move ahead with those projects that are part of the Gati Shakti program. Now, this runs into the question that will the states actually pick those projects? Will they say that this is unreasonable conditionality? Some of the states have criticized the 1 lakh crore assessment provision of funds on the grounds that it comes with conditionality, which they say they don't like. So we need to know how much has been worked out. I mean, are they ready to move and utilize this money, or will this just go unutilized? It's very easy to make provisions in the budget, but to translate those provisions into actual expenditure on the ground requires a whole lot of other things which people normally call implementation. And this 1 lakh crore amount, the implementation depends on state governments, not the center. In fact, as I understand it, the only thing that the center will do is to certify that, yes, this project that you want to push fits in with Gati Shakti. I mean, if the center were to say, look, we're going to be very relaxed on this, you tell us what projects you want and we'll fund it, that would make it very easy. If you introduce this condition that it must be part of Gati Shakti, then you have to know what the states are doing and will there be consensus or not.
Mr. Ahluwalia, if we look at the numbers, the projection of growth for the year, for next year that we've got, all that is looking quite encouraging.
Okay. Well, I mean, not knowing what the base is, I mean, what is it that has caused in the last 10 days an upward revision? I have no idea. So one needs to go into that before one can comment. My impression, by the way, is that on the production side, what you call high frequency data suggests that things might be less optimistic than they seemed at the end of the first 2 quarters. But I don't know what high frequency data they're using, and they probably have more access to data than I do, or for that matter than you do. But then we need to know what has caused this change.
But Mr. Ahluwalia, if we, look at the data, especially the data that's coming from the RBI, from the government, the projections that I was talking about earlier, it's good to hear that India will continue to be the fastest growing economy in the world. But if you look at the recovery, really, it has been K-shaped. Is that really good for India?
Well, no, let's be clear. The correct thing to say would be we'll be the fastest recovering economy. That is certainly true because we had a big drop. So, we dropped more, we recovered more. We should not question the fact that there is a recovery. But to call a recovery a growth is a little misleading. Now, look, in politics, Governments have the right to put forward the position in the best possible way. But all I'm saying is that I don't dispute that the recovery will be significant, but I think it'll only bring us back to what it was in 2019-20, or maybe a little above. The second, and this is what your K-shaped question is, many people have been saying that actually what's happening is some sectors have done very well. Certainly, pharmaceuticals will have done well, healthcare services will have done well, the whole digital services area has done well, and these are good things. And some exports have done well. But on the other hand, the regular manufacturers, they may not have done that well. And what it seems in many firms is that the revenue hasn't grown that much, but profits have grown. Now, that's good for the health of the firms, but probably what has happened is that these firms have got rid of labor, which earlier on they had hired, thinking that there would be rapid growth. And since they didn't see that rapid growth, they got rid particularly of the labor which is not on a permanent basis. And most of our formal sector companies have a very large labor force which is on a kind of informal sector contractual type basis, which they can shed. Now, if they do that, then in that particular year, profits go up. And that certainly strengthens the company's position, but it leads to loss of income in the lower income groups. And then you have the problem of the informal sector and the small and medium enterprises. I think all the evidence that we have suggests that the informal sector is still badly hit. It has not recovered to anything. It may not have recovered to the 2019-20 level. In which case, you have a situation where for some people, things are better than they were in 2019-20, but for others, it's actually worse. And that's the K-shape. And let me say, this is not unique to India. I mean, if you look at any of the international discussions, virtually every country is experiencing the same kind of K-shaped problem.
But in the long term, do you think that this K-shaped recovery could actually be troublesome for a country like India?
Well, I don't think the K-shaped recovery by itself is such a big problem, in the sense we should welcome a recovery. And if the recovery means that this year it's K-shaped, but next year it's going to be robust growth and employment is going to come back, that will be quite a good situation. There are people, on the other hand, who are worrying that the increase in inequality is not just the result of the nature of the recovery from the pandemic, but is a result of longer-term trends in the economy, not just in India, but actually around the world, which are increasing inequality. Now, that's a very complex sort of situation, because when you say these trends, for example, a lot of people say that the recovery of employment, where the employment is not good quality, is not something we should welcome. True, if you can get better quality employment, but certainly if you get employment, that certainly helps. So I think you need to look ahead and see what's going to happen. So I would say that from the fact that the recovery is K-shaped doesn't mean that you're going to get a permanent sort of increase in inequality of the kind that we've been experiencing in the current year. But there are longer-term trends that tend to suggest that the position of labor in the economy is weakening. And in such a situation, the only thing that can ensure a happy state of play is a very rapid growth. Growth where, what they call a rising tide lifts all boats. May not produce quality employment, but if it produced a lot of employment and high wages, etc., people generally would feel that life has improved. But for that, I think the post-pandemic growth has to be what it was in earlier years. We grew at for many years, we grew at more than 8%. And we're nowhere near that. So if the finance minister can actually achieve, I think it'd be good if she gives us a 3-year target. What does she expect to happen? It's good that she set a target for next year. I thought the target was 7.5 plus. You've made it much higher. If she achieves 7.5% next year, that should be called a reasonably good performance. Now, if that is not achieved, then we should accept that it's a bad performance. Certainly, 5% growth will not be a good performance.
Okay, that's interesting. So you want the finance minister to give us a 3-year target. That'll be important. And you also mentioned about the issue of employment. So I want to ask you about your assessment on India's job scenario, because government seems to suggest that, hiring has gone up post-pandemic. CMI data also is trying to tell us that many people who were employed before the pandemic, many of them, in fact, do not want to go back to the job market. They're not really coming back. What does it mean, sir?
Well, there's no question that we're not generating enough jobs to satisfy the aspirations of the public. When you say that people don't drop out of the labor force because they don't want these jobs, what you really mean is they're not willing to take low quality jobs. But it creates a lot of frustration in a young person if he or she can't get the sort of job that they think they're now qualified for. So I think that's not just a problem of this year. It's been a problem for some time. We did have in earlier years, we did have rising employment levels. Total employment increased, but the quality of employment was not actually improving. Even the formal sector, which actually absorbed more labor, did it in a contractual, informal area, not in terms of regular labor. So there was a problem, and that problem has got intensified. And if growth is low, that problem will intensify. Now, there are also technical changes taking place. Now, for example, there's a lot of enthusiasm about digitalization. I share that. I think India has to digitalize. That's the way to go. But let's be clear about it. Digitalization will involve loss of some jobs. And the solution really is, does the process of digitalization trigger so much faster growth that the new jobs created exceed the number of jobs lost? And that's why I think we need the digitalization, but the digitalization should be embedded in a much faster growing economy. My own view is that over the next 3 to 4 years, India needs to grow at close to 8% per annum. And I think we need to ask ourselves, what is the kind of policies that will allow close to 8%? And when I say close to 8%, if it's 7.6, 7.7, I'm willing to call that, you can declare victory. But anything less than that, you will not see the improvement in poverty and the rise of real wages. Remember that during the UPA period, one of the interesting achievements was that for the first time, we saw 180 million people lifted above the poverty line. We saw a lot of informal employment, but real wage associated with this informal employment actually increased. It's easy to have employment at low wages. CMI data, for example, shows that a lot of people left urban employment and went into rural employment. But frankly, an increase in rural, particularly agricultural employment, is a signal of distress, because this is a sector from which we should be drawing labor out. But you can only do that if you can offer them higher productivity, higher wage, non-agricultural jobs. So I think when we talk about employment and trends in employment, we should not divorce that from trends in real wages. And that, on that front, in the course of the last year, the news that I've seen is not actually good. There's no evidence that for large numbers of people, real income has increased. In fact, it's gone down.
You've said that, India needs to grow at around 8% to be able to achieve the objectives that you just now listed out. In fact, the RBI, in its latest, report, has mentioned that its expectation for next year's GDP is about 7.8%. So that's closer to what you're expecting.
Okay. Well, by the way, if you know, whenever you have a bunch of people making projections, they're going to differ. I would unhesitatingly say that if next year the government, RBI, whatever, put together, come up with a growth rate between 7.5% and 8%, I would be quite pleased. Now, people may still not be satisfied. It won't solve everybody's problem. But we would have started to go back to the high growth that we used to have earlier. But good. If we can do that, that's great. The solution really is that we should, we'll certainly get good growth in the next quarter because the previous year, first quarter was very depressed. But in order to judge whether we are on track, we should completely ignore the higher growth that is expected in the first quarter of 22-23. And that's because the first quarter of 21-22 was relatively depressed. I mean, it did rebound, but it was actually below the 2019-20 level. So what is going to happen after the first quarter, and particularly in the third and fourth quarter of next year, is what's going to determine the health of our growth rate. So we just have to wait and see.
Okay. I also want to talk to you, Mr. Ahluwalia, about the issue of private investment that continues to remain quite low in the country. Why, despite support from the government, the private sector is not really willing to loosen its purse strings, in your view?
You should always assume that the government is serious about inflation. I obviously have no idea what is going on inside the government, but from the period when I was in government, the one thing that governments worry about is inflation. Because in the end, it's nobody feels GDP growth directly, but people feel inflation directly. Yes, the 6%, my guess is that the RBI must be a little bit worried because they have a target of 4%, but it could be a couple of percentage points lower, which wouldn't worry them, or a couple of percentage points higher. So at the moment, it's 6%. What I think they have said, now I've not studied this very carefully, but what I think they have said is they believe that this is temporary and this is going to go down. Well, I think we should just watch if it does go. And they're right about one thing. If it is going down, then there's no point squeezing the economy too much. But if it doesn't go down, at some point you have to make up your mind that the world is turning out to be different from the optimistic assumption on which you planned, and you do something. So at some point, I'm sure they'll be watching. And certainly, if it doesn't turn down over the next 2 months or 3 months, there would be a case for doing something on the monetary side. Well, let me put it this way. I mean, if capacity utilization is about 65%, why should anyone invest until capacity utilization picks up? So my guess would be that our first objective should be to get production going up. And that's why in the thing I wrote in one of the papers in Mint, I said that, look, right now the economy is demand constrained. We're not in a lockdown. Such restrictions as there were have been removed, which is good. But capacity utilization is still very low. And I think most people realize that business starts thinking of investing when they see the economy picking up and maybe the capacity utilization rate goes above 70%, which could happen. Okay. One good thing is that the balance sheet of many of our private sector companies are now quite good. I mean, they've made a lot of profits this year, perhaps at the expense of labor, which they've shed, but they have made profits as a result. Many companies have pared down the debt, so they're in a little bit better position to expand. Banks say they would like to expand their credit. That's a separate issue. Are the banks in a mood to take credit risk or not? But I think the crux of it is capacity utilization. We have got to get the production going so that private sector senses that there is demand out there. Now, at the moment, things like two-wheelers and so on, there is a demand shortage. I mean, offtake is low. And that's usually one of the areas that people look at to see whether consumer spending is turning up. And that's why I think it makes sense for public sector investment to be pushed. You know, there's a lot of talk in the newspapers that we may actually do better on the revenue front than the revised estimates had projected. I mean, my view would be that if that happens, we should not try to take credit for a lower fiscal deficit. We should use the slack to spend more money, to advance some money, clear some bills, push money into the system, and come back with a 6.9% fiscal deficit. We will get no credit for reporting a fiscal deficit lower than 6.9 because the market has factored 6.9 in. The worries about the market are we in future going to reduce our fiscal deficit? So if we get good revenue, let's spend the money. Let's accelerate transfers to states. You know, at any given time, many demands from states for disbursal of funds are held up. So I think, I hope that I'm sure the finance ministry is thinking about it, but the general direction should be that there is no merit in lowering the fiscal deficit target below 6.9%. If there's more money coming, let's spend it. I mean, the easiest way of spending it is in health, because that's an area where everybody agrees we need to do more.
Okay, Mr. Ahluwalia, I also want to talk to you about the three farm laws. Many saw them as the 1991 moment for the agriculture sector, but those reforms had to be rolled back by the NDA government because of the protest that happened. Do you think this has in some way impacted NDA government's reform appetite?
Well, I can't judge how the government has viewed it. I hope not. I mean, look, the protest against the farm laws, I think, reflects the fact that whether the laws were well intended, and I suspect that they were well intended, because the need to reform the marketing arrangements, I mean, had been certainly been said by us in the Planning Commission. Only thing is that at that time, our reading was that these reforms should be done by the states. So we spent a lot of our time trying to persuade states to reform. Some states did, others didn't. The government's reading, and that's a matter of the legal advice they got, is that constitutionally they can do it. So they decided to do it. You know, my feeling is that had there been more consultation, maybe we would have avoided what became an unfortunate political logjam, which went on for quite a long time. But I hope it doesn't. I hope it doesn't lead to a loss of appetite for reforms. Because let's face it, we need the reforms. What it should do, I think, it should create a greater appreciation of the fact that complicated reforms need to be discussed more thoroughly, and you need to get people on board rather than simply taking an initiative because you think that's the right thing to do. So I hope that that's what happens.
Mr. Ahluwalia, now we are speaking at a time when the country is also talking about a big fraud in the banking sector, around 23,000 odd crore rupees, an account that had actually turned NPA or bad loan in 2013. What does it really say about India's banking system in 2022, sir?
Well, you know, I'm only watching the SMSs and the WhatsApp accounts. I've not read this. I mean, you know, such a huge NPA problem deserves very careful thought. So I wouldn't want to respond specifically, and particularly since these kinds of things invariably become, there would be allegations of criminality. So I don't want to make a comment without knowing enough. But, you know, as far as the banking system is concerned, I think we do need to recognize that we've been talking about banking sector reforms. One of the things that worries me whenever these reform frauds, allegations of fraud come up, you have to ask yourself the question, is this going to discourage bankers from lending, or is it going to encourage a revival of credit? I regret to say that the excessive focus on finding out who's responsible almost certainly will lead to greater caution in lending. And that's a bit of a problem. However, I mean, if some wrongdoing has been done, there's no alternative but to find out who's responsible and take action.
And last question, Mr. Ahluwalia, before we let you go, what should be India's approach towards cryptocurrencies? Because as of now, as we speak, we're getting mixed sort of statements from the RBI and the Ministry of Finance.
Well, you're laying a huge burden on me to talk about things which didn't even exist when I was in government. So I'm only as informed as, let's say, the average interested person. The interesting thing about cryptocurrencies is that the Federal Reserve in the United States has recently put out a paper. And what they've said in the paper is that, look, it's a complex issue, there are pros and cons and so on. And they've said, whatever we do, we are going to have a broad-based discussion, listening to everybody, and then take a view. So personally, I think we should be doing the same thing. I don't know how to react to these piecemeal comments. I mean, on the one hand, the RBI says that they're thinking of a digital central bank currency. Okay, that's very different from the crypto. I mean, cryptos are private currencies which are not legal tender. A central bank currency which is legal tender is a totally different thing. There are people who've done it. One needs to know whether in our system it will actually increase efficiency or it will just lead to disintermediation of deposits from the commercial banks to the Reserve Bank on the grounds that that's safer. Now, for the Reserve Bank to be dealing with millions of people holding deposits in the Reserve Bank is going to be a complete mess. So I think that's where the Reserve Bank needs to bring out that if it introduces a digital currency, how is it going to manage it? The second issue is the issue of properly called cryptocurrencies. That is, private currencies not backed by any real asset value, which people are investing in, if you like, as an asset class. Now, frankly, I am not a great believer. I don't believe that there is any great merit in becoming open to cryptocurrencies as an asset class, especially in an environment where we are not open in the capital account. So the idea that somebody will invest in Bitcoins because they make money, I mean, the truth is it's a horrendously volatile asset. And I fear that while it has risen to the top, I wouldn't be surprised at all if you see a crash. And remember, Bitcoins was meant to be a unique and scarce private currency. Now, the problem is Bitcoin may be scarce because the algorithms that generate Bitcoin, I think, limited to 21 million Bitcoins. But there are other algorithms that generate other cryptocurrencies, Ethereum and things like that. So frankly, I feel that the Reserve Bank should bring out a consultation paper on the digital currency pros and cons, cryptocurrency pros and cons. I believe I saw in the newspaper one Reserve Bank deputy governor saying that cryptocurrencies should be banned. Then in the budget, the finance minister has introduced a tax on transactions in Bitcoins and also a capital gains tax on any gain made from these transactions. Then some people said this amounts to legalizing Bitcoins, but I think she has denied that. And that's a relevant issue because, even if something is illegal, and part of the problem is that a lot of Bitcoin, the essence of Bitcoins is privacy, whereas a central bank digital currency will have none of those privacy benefits. It will be known who is transacting. Bitcoins is not known. That latter factor is been for a long time one of the biggest appeals of Bitcoin. And a lot of people say that, shadow activity, illegal activity, drug money, and all of this gets settled through bitcoins because of the privacy. Now, I think we need to give it a lot of thought. What is it that we're going to gain from this? So, on the whole, I mean, I'm not convinced that legalizing or encouraging trading in bitcoins is going to be economically beneficial for the economy. Central bank digital currency is another matter altogether. But I think that the Reserve Bank should bring out a very considered discussion paper, not to explain what it is going to do, but to put out what the issues are and hear opinions. Because, you know, I may be wrong, and I'm told very often by a lot of people that young people are very enthused by bitcoins. Fair enough. But, you know, young people are enthused by everything new. And if they've convinced themselves that this will somehow lead to modernization, and you think it's not, then you better inform them, and they should make an informed decision.
Interesting point, sir, that you've made as far as the issue of cryptocurrencies are concerned. Appreciate you joining us here on Mirror Now this evening. Thank you very much for speaking with us here on Mirror Now.